I'm going to start with a question for you, Francesco.
Yes.
Francesco, is Wall Street relevant anymore? Does it matter who is running Wall Street anymore? Is it relevant? You have a slow growth economy.
Right.
You have Dodd-Frank. You have increasing regulation. Right. You have a stock market that kind of grinds higher,
right.
but there's no great volatility to it. Does it matter who's running Wall Street anymore?
I think it does. I mean,
you think it does?
I'm surprised at the cynicism coming out of you.
Yeah,
I mean,
well,
this is
I'm just,
like,
you know,
I'm normally
said
the most
you
cynical
spoke.
person in the room, but not in this case.
Well, I'm just asking the question.
These banks, have certainly retrenched. They're certainly smaller. They're certainly having a pretty poor stock price performance, but they still command a huge amount of billions of dollars in lending, investment activities.
They're important to the economy.
They are crucial cogs in the economy. Now, maybe they're not working so well, but they're certainly very important. So, yes, it is relevant.
It is relevant. Years ago, you bring up the big shot Wall Street CEOs of past, Dick Fuld, that didn't end so well. You got some that are gone,
right.
like Dick Fuld of Lehman.
Right.
I forget, Jimmy Kane was running Bear Stearns at the time. He's gone. And then you had some old guard people, like a Lloyd Blankfein, Jamie Dimon. They're still around.
That's still around.
But has there been a changing of the guard?
It has been. It has been quite actually wholesale. And I don't think many people realize this. But if you think about it, so Jamie Dimon at JP Morgan, Lloyd Blankfein at Goldman Sachs, and Brady Dugan at Credit Suisse are the only three CEOs of a major bank, major international bank, who have stayed through the crisis. They survived effectively the crisis.
And Brady Dugan, I think, just came on just before the crisis.
Before the crisis. So it's really that few. And I guess you would expect a wholesale change. But what I was trying to say in the column is that the change is also brought with it different values, different personality, a different culture. I hope, a different culture, because the previous one didn't work so well.
And you think that culture is personified in, say, someone like James Gorman, the CEO of Morgan Stanley? And I asked that because, here's a guy who was a McKinsey guy, consultant.
Yeah.
He hooked up with one of his clients, I think it was David Kamansky over at Merrill Lynch. Served him well. Ran the retail business at Merrill Lynch, kind of hopscotched, and is now running all of Morgan Stanley.
Right.
And he basically came out and said, you know what, there's something wrong with the culture of Wall Street. Didn't he say that?
He's been quite open about it. The interesting thing is, if you talk to this new guard as I have, privately, they're all saying that really the old playbook didn't work. Now, that's self-evident, but you would expect a lot of people to think that, maybe we can start again with the old practices. Just to summarize, the old practice was, put on as much risk as you can, pay yourself as much money as you can.
A lot of leverage on the balance sheet.
And make as much money, make as much money for yourself and your shareholders through leverage, right? That was the old playbook. Didn't work out so well when the leverage was pulled from under their feet. Now you see all these new CEOs striking a much more contrite tone and talking a lot about having to shrink to grow, in particular shrink pay to grow.
Right. And James Gorman came out and he basically said, look, life's too short. If you don't like what you're getting paid, go find a new job.
Right.
Which are tough words that you don't very often hear on Wall Street, because on Wall Street the history was, I'm the king of the kingdom, and I have my all my vassals, my barons, my lords. I pay them well, and they give me their loyalty.
Precisely.
Right? That was the old system. That system's broken down.
It's broken down. The question is, what's going to replace it? And the question is, will we see the system resurrect itself if the markets take a turn for the better? Right.
Now,
so if the boom times return, does Wall Street get back to the old tricks?
But you do have someone like Lloyd Blankfein, and I don't want to place it on extremes because I don't think the Goldman. I believe Goldman Sachs has changed, but he's come out and he said, you know what? We're at the bottom of a trough. Things will come back. Sure. And the Goldman business model will be adapted, but it won't be wholesale changed or radically changed.
Right. So he is, in fact, the only one who says that, right? And so that's an interesting dichotomy here, because he's the outlier in this case. He says that this is not a secular transformation, it's a cyclical downturn, and things will come back again. Now, I would say that he has to say that because the Goldman business model is very much geared to that, to a cyclical downturn that then picks up again. And also because people at Goldman will not like to hear that their business model is never going to work again, because that affects their bonuses and their job satisfaction. But he's the only one. The other guys haven't really said much.
What do you think James Gorman's foray, or placing the big chip on the retail brokerage side of the business, do you think that's going to play out for him at the end of the day? Or are the economics on that side of the business so broken that he can't bet on that to take him through at the end of the day? Doesn't James Gorman, at the end of the day, doesn't Morgan Stanley need a huge bull market on Wall Street in order to prosper?
I think I would say two things. One is the fact that they even placed the chip there is interesting, right? They have had a pretty bad experience with retail in the past. It was retail of different kind. It was credit cards and stuff like that, as we all know with Dim Witter. They really felt that they needed to do something to change things, and they did that. And as to whether the bet pays off, I think the bet pays off in a way that will give them a profitability that is not the profitability of the golden years, but something more stable and much lower.
I'm not sure if a 5 to 8% return on equity is the kind of profitability that any of their shareholders are going to get too excited about. But time will tell. Francesco Guerrera, you sound more optimistic than you have in the past.
Yeah.